Let's get started here. So welcome to Steady Incomes Trading live streaming trading session. Today is 19th July, Friday. We're gonna do our usual trading session where we place on a trade, take a look at the account, talk a little bit about what's going on, and then set the plan for next week. And to do that, we usually start with checking the current portfolio metrics, and then we log all of that in here to our spreadsheet, see where we at, and all is peachy. So to start off, we'll take a look here at the platform, and I quickly need to take a peek at the Netlick 74.31. So let's record that. 74.31. 74.30. Oops. Just a second. What is it? 74.31. So we're slightly down from a couple of days ago, which is to be expected. Market has been down, and that's just standard. So VIX right now is at 1618. So VIX is up. This is generally good news. Obviously, we take a little bit of a beating in the beginning, but then we get to place some better trades once the VIX is higher. And this is just normal VIX, 16, 17, 18. That's the standard range. We've just been in a very low VIX environment for a long time, but that's hopefully we stay around this range for a while. Deltas are 163, theta 93. So 163 and 93. 163 and 93 for this one. Vega and buying power. So for our Vega, we are minus 819, minus 819, and then our buying power. We have to open it here, refresh this just in case it needs refreshing. Buying power usage 21.1. So we're still pretty low. 21.1. Our notional divided by Netlick is 1191. So this is just one of our leverage measurements, and then another one is units at risk, which currently stands at 3.3, which means we have total exposure equal to 3.3 naked ES puts. Even though we are trading MES puts, this is all converted to MES. And then on the right hand side, we can take a look at our portfolio metrics expressed as percentage of Netlick. So delta is, as you can see, at 0.23. So it's getting a little bit higher, but still within our comfortable range, even though it's on a higher side. Theta, we don't really care about theta pretty much at all. Vega, even though our main goal is to collect theta, but for portfolio measurements and judging the risk and all that, we don't really care about theta that much. Vega also, this is work in progress. We don't really look at it for right now. What we're doing is collecting data. Once we have enough data, we'll try and draw some parallels and see if this can be useful in any way. Our buying power, it's pretty low still. We are perfectly fine when it comes to buying power. And our Netlick per unit of risk is a little bit over 21,000, which is fine. We do like to stay over 20,000, although that's also subject to to change to measurements and some decisions down the road. But let's take a look what's going on with our platform here, just to kind of go over our open trades. And as you can see, the market here is going up and down today. You kind of can't make up its mind. We don't really care. We're not gonna, we're gonna place a trade either way, and there is nothing here that would make us do anything drastic or anything. As you can see here on the positions, am I not sharing my screen again? God damn it. I'm so sorry, guys. I'm gonna get the hang of it. Thank you. Thank you, Jean. Let me just go back here. Okay, so I was just putting these metrics right here, and then as you can take a look here, it's these are the things I was talking about, the percentages. I need to get a hang of it. This screen sharing thing, it happened the last time as well. But we are getting there. First time we had technical difficulties. I couldn't get in. Now I got in real quick, and I'm gonna get used to this. But let me also show you what I have here, just to celebrate this poop. There you go. All right. Hope we don't have to put too many of these going forward. So let's go ahead and take a look at the platform again, and let me see if I can do this. Oh, see, this is cool. I can move around, and let's just, oh, this is just a reminder to like the video if you find it useful. And so let's take a look at our positions. So we have a bunch of put debit spreads, as you can see right here, but all of these are expiring today, so they're not really that important. They're going to be gone. Then we have some that are 12 days. They have 12 days to go. There are also, you know, they might come into play, but you know, 12 days to go, not too strong. And then we have some 28 and more, and those could come into play. As you can see, for example, we have the long put of 5100, 5200, 52, 52, 51. So right now we are at 55. So we still have ways to go for these to come into play. But if we continue to slide further next week, those might come in handy. Then we have our naked puts here. The first one being 67 and 75, 80. I'm sorry, 80. No, those are the only two in this expiration. And if you take a look here, they are showing profit of 52%. Now granted, this one was at some point somewhere around 67-68%, and we could have taken it off, but due to our little tweaks to the strategy, we let it go a little bit further because the market was going up and our metrics were allowing us to do that. So we didn't close it. Now we're under 60%, and 60% is our main initial goal, our benchmark. And given that it's at 52 now, we're just going to let it for now until our metrics get stretched, should the market go down and the VIX go up. And then we have another one here, 42% profit. So we're pretty comfortable with these here. But in a newer expiration right here, we can see that we have a few more here. So these two are, 5% profit. So those are good. They've been open for a little while. And the ones that are hurt one is, let me see, it's telling me here that the data is not getting to YouTube. I hope you guys are getting the stream. Okay, it should be back now. Okay, so as you can see here, this one is at 27% down, and then this one is 30% down. Then we have another one 38 and another one 63. So the most recent trade, well, actually one before most recent was 83, and that one was put on at a both of these were put at the elevated risk, elevated VIX. So this one was put only 4 days ago. This one was put 2 days ago, but this one is at 63% down. So that's the most challenging one, but nowhere near our 200% loss. And if we reach 200%, we're just gonna close it, and hopefully by that time we'll be able to close some of the put debit spreads for a little bit of profit to mitigate that. And then if we were to continue to slide down, we would then be placing some negative delta trades to further soften the blow from any of these stop losses should they get activated. But at the moment there is nothing here for us, nothing really we need to worry about. So what we'll do is we'll go back to the spreadsheet just to quickly take a look at the parameters for our next trade. And with the wicks over 16, we are looking at around 11 delta for our naked puts. And then right here we are still looking at around 25 or a little bit higher, given that we're on a higher range of this 13 to 17. So let's remember this, 11 and then 25. Pretty simple stuff. So let's go down here, and I'm gonna move myself to the left, so because we're gonna need this area right here. Let's take a look at the trade tab. 91, 119, so we can still go for 91 DTE, even though we have a bunch of trades here. Now they were put at different times for different premium, but you can see here we have a free 11 delta, and that's what we will do. We'll go, let's see, our standard 3 naked puts, which gives us 487, which is just fine. This is right where we want to be. So we'll go ahead and try and collect this full amount first, and then if it doesn't work, which okay, it did, so 3250 is what we got. So as usual, we go 3250 times 3 and then times 5 gives us 487, and then times 0.2 for the maximum we want to spend, including commissions. And given that the commissions are, you know, somewhere in the neighborhood of $15, we want to spend somewhere between 80, 85 dollars, around 85. So let's see what we can get for $85 with these parameters, and we go to either 63 or 73. We can try and go for 73, see if there is room here to put something around 25, 26, 27, somewhere in that neighborhood. So if we go here and here, this is too expensive. So if we go here, that's too cheap, so we can't really, and we don't want to go here because we already sold one here. I mean, you could technically do synthetically, you would get the same thing, but it would be hard to track. So instead we'll just go here and see what we can do, and then that's a 24 delta. So we could just go here, do 24 delta, or we could go to a shorter expiration at 63, just see what we can get here. Okay, so let's go to 25, or let's go to this one, and then see what we get. So here we could get a lot, well, we could get something like this. Let's go to 25. So this would be 100 wide for 78. So let's just see, that's 26 delta. Let's see, okay. All right, let's just, but we like these 25 strikes, so we'll just go for this and spend a little bit less than planned. We'll probably have to up the cost anyways. Well, maybe not, let's see. Let's just close this real quick, and then we go to activity. We might have to up it, right? We go here, replace, go up, and let's see if we can get that. Okay, so now we're chasing it a little bit, which is all fine. Well, looks like liquidity is gonna be pretty weak here, because let me just see something. All right, let's go for 1650 and close this. And if that doesn't close, we'll just leave it for a second there and see if it works. Okay, so in the meantime, we can take a look at just see where we are here. Yes, minus 0.33, so it seems like it's been moving around the same. Okay, so let's go to trade activity. So we are offering way more than the mid price, and we're still not getting action. So let's go ahead and cancel this order and see if we can go to, let me just see, let's go to 62 and do the same thing. Let's go to around let's see, here and here. That's 30 I'm sorry, let's oh, these are smaller strikes, so I need to go uh, something like this. This is 5360 50, so 110, and so let's just try and see if there is more liquidity here, if we can do that. Working, so let's replace, let's try offer a little bit more money. Okay, so we closed that for 17. So let's open this, and then let's go to this and record this trade so that we complete the circle. So this will be trade 84 in MES, today's date. VIX at opening 16:10. I know this doesn't mean much at this moment, recording this, but over time, when you build a large database of different openings with different wicks, and then you can analyze what happened, how your different strikes performed or different deltas performed under different wicks. So that can be used later on to fine tune the parameters, the strategy, and all that good stuff. So let's take a look here. We did 50-25, and it was 91 days, I think, and we got 32.50, but let's double check. 32.50 for 3 of them. Yeah, so that's correct. And then we did here M for MES, and then let's see, we did 53.60, 52.50, 53.60, 52.50, and that was in 61 days. I'll double check. I think it was 61, and then let's see, I think 16.50 we paid. No, I'm sorry, 63 days. So 17 is what we paid, so minus 17, and we did one of those. Let's just open this, and 18th, so should be September 20th, 63 days it says here, even though on the platform it gave 62. Sometimes that happen when they overlap. So this is a mistake. It should be minus here, so this is a lot more like it. So now we recorded this trade and we are done with our trading. We'll go back and check all the parameters and see if we are still okay, and if what change. Obviously our metrics will be a little bit higher now, but nothing drastic for sure. So to do that, let's go back, and remember this is trade 84, and we might as well go ahead and group these trades here that we just did. So this is gonna be called naked puts 84, and we did the put debit spread in this expiration, and we're gonna call it put debit spread 84. Remember, we don't manage these trades together. We put them on together at the same time, keep certain ratios, but then we manage them separately with different stop losses, profit takes, and all that good stuff. But we are good. And here, just take a peek at the P&L profile. Now, I don't put too much stock in this. This doesn't mean really much, because this just takes all of the trades, assuming they were taken to expiration and they expire here, so it doesn't really tell you much, but it gives you an indication of where we at. For example, if we stay here, everything expires worthless, then this would be the value that would be collected, but that's not what we're doing. We're closing the trades earlier and same, but we always want to try and have a little bit of a bump here, which will then help in any pullback, will help a little bit. This is not a hedge by any means. It just helps us get out of the way and collect some premium on the market's way down. But that's it. And market is now down 0.5 basically. So let's see what I said we're gonna do. Okay, we're gonna go back to the main, and let's remember this 177 and then 102. So we're gonna correct this. 177 and 102. Our Vega is gonna be minus 905. Buying power is gonna be a little bit higher. So let's see, 23.1. Still nothing drastic. 23.1. We are now at 1298. 1298. And then we have 3.6 of these trades, and then we can quickly take a peek at the Netlick. So 73.15, 73.15. All right, 73. Okay, and as you can see now, our underexposed, overexposed metric says no, and we can quickly take a look why that is. It's not the buying power, because buying power is only at 1.43 times VIX. Portfolio delta is right at the maximum for the measurement. We are a little bit under with our funds per naked per unit of risk, and then book wipe is fine. So if we had any trades at the moment that are over 60%, we would go ahead and close them. If we were being extra cautious and wanted to, you know, just take something off the table, we could go here and do that. Take one of these. Let's say this one. You would take the one that has the most profit first, but I'm not gonna do that because, you know, 60% is what we're shooting for, and unless we're really stretched, we have two sets of measures. One is underexposed, yes or no, which is just for the extra, you know, like a little extra premium that we would get keeping some naked puts staying open for longer. But on our trading plan, you will see that we have the where is it? Just if buying power is over 45%, and then we would try to manage something, and then also somewhere here it's going to show you the if our delta gets to 35 or higher, then we could start managing something. But for right now, we're perfectly fine where we're at, and we're not gonna, let me just go back here, we're not gonna be closing any trades right now. Now, of course, there's a weekend coming up. Anything can happen over the weekend. It could go up or down. There is, 50-50. I know a lot of people are gonna say, oh, the market should go down, the indicators and yada. But at the end of the day, it's still just 50-50. It's just in hindsight, people will say, oh, I knew it was going to go down, but you can't know, and anything can happen. So we'll just keep it open, and sure, yeah, it can go down, and if it does go down, we'll start hurting more, and then we'll come in on Monday and manage if we need to. Otherwise, that'll be it. And yeah, I think that's it for today, for our session today. Make sure, let me do this real quick. Make sure that just a second, there you go. Make sure you like and subscribe, and for these updates, we'll be doing these live trading more often. We are live stream, so to make sure you get notified and to participate in while it's actually happening, make sure you subscribe. So that also helps the channel reach more audience, and I would appreciate that. So with all that, have a fantastic let me turn this off. Have a fantastic weekend,